Hello, I welcome you once again. Today we continue learning because we never stop learning, because at Manifested we never stop teaching. Today we are going to introduce banking. Banking, we are going to expand our knowledge in the topic of banking, expanding frontiers of thought. Banking. In defining banking, we first look at the meaning of the term bank. Okay, bank. And in defining banking, just like money, where we defined the term money based on the functions of money, the same will apply when defining banking. We define banking from the perspective of the functions that are performed by a bank. So what is a bank? A bank is a financial institution that accepts money deposits from the public for safekeeping and lends out the money to the public in the form of loans. So a bank is a financial institution. Banks are financial institutions. They are financial institutions that are set up to carry out financial transactions. So banking refers to the process by which banks accept deposits from the public for safekeeping and lend out these deposits as loans to members of the public who are in need of it. And while doing so, banks safeguard the deposits received from the public and avail them to the depositors either on demand or after a short notice. So banks are therefore intermediaries between the savers and the borrowers. Banks are intermediaries. Banks between the savers and the borrowers. The savers, when you save money, say from your employment income, you may decide to take part of your savings to a bank. So the bank there will take your money. So you deposit the money into the bank. Then this bank, because the bank exists to make profit, the bank may decide to take your money and lend it out to these borrowers. So this money, we're saying a bank is an intermediary. The bank there comes between savers in the economy and the borrowers. Those who do not need money may take this money and deposit into the bank in an account that may generate income or interest, or just a current account or a fixed deposit account. So where, for example, if you take your money to the bank and you expect the bank to pay you, because it's like you are lending the bank, okay, the bank will accept that money and promise to pay you an interest of, say, 6% on your deposit, for say, and the bank may say that you may agree that that money will be kept in that account for, say, 6 months. So you deposit, say, 1 million shillings into the bank. The bank promises an interest of 6%, say, per month for 6 months. So this money that is deposited into the bank, instead of the bank just keeping the money, and since the bank also exists to make money, the bank will take your 1 million and advance it in form of a loans, because these are deposits. You deposit in the bank lends out that money to borrowers in form of a loan, and these borrowers may be expected to pay interest because the bank is lending, say an interest rate of 18%. So that's what happens when you have money and you don't need it. So the bank acts as an intermediary and gives out money to those who may need that money for economic development. So a bank is an intermediary. That's what we mean when we say that a bank is, or banks are intermediary institutions. And banking is a process by which banks accept deposits from the public for safekeeping and lend out these deposits as loans to members of the public who are in need of it. So banks are therefore intermediaries between the savers and the borrowers. Now, banks, like any other business enterprise, operate with the main objective of making profits. And the operations of banks are governed by guidelines that are set out by the central bank, the Ministry of Finance, and other laws like the Banking Act, the Companies Act, and so on. Now, in addition to these laws, the Kenya Banks Association, which is the umbrella body of all banks in the economy, plays an important role in the regulation of the banking industry. So that is the meaning of banks. Later on, we will discuss the functions of banks, like the central bank, the commercial banks. Will come at that. But today we want to just introduce banking and also maybe give some background. How did banks come into existence? What is the evolution of banks? Or the origin or the history? What is the history of banking as we know it today? Now we look at that history in a short while, and development of banking or history of banking. Now, the origin of banking can be traced to development of the paper money. Okay, because both the paper money and banking have their origins in the activities of goldsmiths. Okay, goldsmiths who were entrusted with coins made from precious metals for safekeeping, as the owners faced the risk of losing them to thieves. So the development of banks, the origin of banks can be traced back to the development of what we call the paper money. And we're saying that it started all when individuals in England took their precious stones to goldsmiths. Now, goldsmiths are simply the manufacturers of articles made of gold. These are people who make articles or items out of gold. So these are goldsmith. So